Dan in Welland, Ontario. Go ahead, please.
Hi, thank you very much. I was just wondering, in today's current environment for defaults on rents, why would I want to rent out an apartment in my house with the number of people that are just not paying rent, and you have very limited abilities to evict them?
Lauren, you read these horror stories, don't you? Tenants from hell.
Yeah, or you experience them personally. Yeah,
yes.
It is a tricky environment to be a landlord. I think it's also a tricky environment to be a tenant. But if it's in your own home, that has a number of different layers. I think if you need the income, then it becomes a matter of rolling the dice and doing a lot of really good tenant screening. You can evict a tenant for non-payment. However, it can take, at least in my experience, it can take upwards of a year. And so if a tenant is not paying, it is possible in most environments, most of the time, to go through the landlord and tenant board and have them evicted.
But it's very backed up in Ontario, I think.
It's backed up, but it's still, I've had a few in the last couple of years, and it has been about a year to be able to evict non-paying tenants.
Stressful.
Very stressful, again, if you rely on that income. However, it sitting vacant, it isn't creating any income for you either. And so it's a matter of having good tenant relationships, doing as much screening as you can, and realizing that the reality is most tenants are great.
Yeah.
So do your best up front to create a good structure.
Peter in Kingston, Ontario, go ahead, please. Oh, I'm sorry, it's an email. I've legally severed my property. I now want to sell the vacant parcel of land. What are the pros and cons of offering a vendor take-back mortgage? Ron, could you take that one on? And just remind us, what is a vendor take-back mortgage?
Vendor take-back mortgage is when the buyer comes to you and says, I'll give you a deposit, I'll give you a down payment of, say, 20, 25%, and I'd like you to give me, you the vendor, give me the mortgage. So if there's an interest rate decision to make and you start paying, that buyer starts paying the seller. Now, the good side is it makes it a little bit easier to sell a piece of vacant land. The really awful side is you're now a bank. You've become a bank, and I don't think that most people really understand the implications of that. What if they don't pay? How am I going to get this contract solved? They're on the title. How do I get them off if I'm not receiving the money? And you're going to end up with a lot more legal complications. At the end of the day, just sell the land, and that's the best possible answer.
Walk away.
That's right.
Yeah, just say, sorry, man. Yeah. Ray in Alliston, Ontario, go ahead, please.
Yes, I'd like to know the reason for the construction costs between the year 2012 to 2024. And I wonder why they insist on the fact that the lower interest rates will help housing costs when they just raise the price of the housing after that.
Thank you. Bob Dugan, could you take that on? Because we've seen this exponential rise in construction costs.
Yeah. So I'm not sure if we're talking construction costs or house prices here, but, house prices have gone up a lot in an environment when interest rates were low. And when you think about the way people qualify when you go into a bank, right? I mean, you have an income, there's an interest rates, and they spit out a number. How much can I qualify for? So in low interest rates, that is a much bigger number than when interest rates are higher. And that can certainly drive a lot of demand for home ownership, and it allows more people when rates are low to go from rental to home ownership. So there's been a lot of demand. Now, when you think about the period that they're talking about starting back in 2012, I mean, the story has really evolved. Back from 2012 to about 2018 or so, a lot of the affordability talk or a lot of the escalating housing costs was really a Toronto and Vancouver story. The rest of the country had fairly low growing house prices, but Toronto and Vancouver were really growing at a crazy rate back then. And since the pandemic, it's been more of a generalized problem of, declining affordability, not just in Toronto and Vancouver, but across the country. a lot of that has to do with the acceleration in population growth, and which exacerbated the supply issues. But it's always been a supply issue. So when you look back, we did a lot of work on this and published it back in about 2018, looking at house price escalation from about 2010 to 2018. And really in Toronto and Vancouver, that's where we started this whole narrative of supply being one of the main culprits. And that narrative has grown, as I said a few minutes ago, to now include a lot of the country. Many cities around the country are experiencing supply shortages and growth in prices. And we see this not just house prices, but as I mentioned earlier, in rent prices. And rent prices in cities across Canada, when you see turnover in the units, have seen really big numbers. And so I mentioned Toronto, turnover rents growing by 40% last year. In other cities, not quite as strong. Vancouver's closer to 30%, but you're seeing big increases in numbers because supply isn't insufficient. And so that's one of the key reasons why house prices and rents have gone up.
Let's head to Toronto. Perry's on the line. Go ahead, Perry, please.
Yes, thank you for taking my call. I own a beautiful condominium in Yonge and Eglinton. I'm living here for 15 years, but I heard from my son-in-law that if I passed away, which I do, everything goes as a tax. Nothing reaches almost to my children. Thank you.
Ron, I didn't quite hear the last thing there.
It's a capital gains question.
Oh, okay.
So
yeah.
in the case of there's no spouse to pass the house on to.
Okay.
In that situation, it goes into the estate. It becomes an asset sold by the estate, and capital gains applies.
It's as if the house was sold.
It's exactly correct. Yeah. Well, the house will in all likelihood be sold.
Yes.
So the proceeds of the home versus the original purchase price become subject to capital gains with the normal exemptions. I mean, at the end of the day, it's not all going to be tax. It's going to be some tax.
The gain on it, essentially.
Correct, yeah.
And do you get people confused about this issue, though? What happens to the home at death?
Yeah, sometimes people do worry about it, but it happens, sadly, every day. And it is handled by a lawyer. It goes through probate. The home is sold, or in the case where there's two people on the property, two people on title, it actually transfers for free between the two. So in those cases, there's really no kind of tax implication.
We're going to be back with what we're calling our Power Housing panel, answering your housing-related questions. Toll free 1-855-326-6266. You're watching Ask Me Anything Housing.